Hey guys, welcome back to another episode of Market Mastery. I am here with Trader Roman, making a special guest appearance back on the channel. So I'll let you guys be excited about that. Thanks for joining us, mate.
All good, dude. Thanks for the invite. Market's looking pretty juicy after that weekly close this morning. Pretty keen, pretty excited.
It definitely is. We definitely have a lot to talk about. So yeah, looking forward to it. Let's get into a few things quickly. I'll cover off a couple of things and then we'll jump across to a few of your charts because we've got some interesting things to cover off. But I think the main thing that everybody's talking about at the moment is the Wyckoff reaccumulation range, or is it just, basically a redistribution or we're about to crash down. Now, let's take a quick look at a few things that are quite notable in the current range. And I drew this a while ago and it seems to be filling it out. Originally, we thought that this possibly could be the spring and that would have required us to push up through here and it would have been quite a short range, but we're getting a lot more of a proper Wyckoff reaccumulation range with, the bleed out through here, which sort of helps us define where the creek lies. When you can see this is the green line through here. So now the next thing we're really looking for is the signs of strength to start to show and is to push up, above this 38K range and above the JAC, which is the jump across the creek. Now, most notable thing in this price action through here is the big volume that we've actually got during the spring. And then this spring has actually ended up being a complex spring. So instead of it just being a big dump off like this, and then we push up out the top and fly from there, we've actually had a bit of a trading range for our spring, which is sort of below and a little bit above the second test phase B. So yeah, the complex spring is basically a trading range spring where it takes a little bit longer to play out. And that's what we have seen sort of kick in through here. So we did have quite large volume get put in. Obviously, going to have to look at different exchanges for this one, but on the 4-hour candle is actually the largest for the entire trading range, as you can see through there. Apart from the selling climax, and this is on FTX. If we go across to the Binance futures charts, we actually see on the 4-hour, the candle absolutely dwarfs the selling climax candle from the mega dump that we had from 40K all the way down. Now, obviously, there's a small caveat to that because Binance futures did go down during that time, but you can still see the absolute huge buying volume compared to the entire rest of the range through here when we did dip below range lows here. So that's why, we can sort of use that volume analysis to give us insight into what the composite man might be doing, which what it looks like is a lot of buying below range lows. And obviously that was what put in the weekly SFP, right? So when we had the weekly swing failure below the selling climax over here, there was a lot of buying in this candle through here to hold us up and keep us bullish and stop us from rolling over. So that really lends itself to being most likely this is in actually a reaccumulation rather than a redistribution. The argument for redistribution at the moment is that, this is the range high through here, and this was actually a UTAD where we went above the range highs, right? And you would be dropping this down like that. And so then that would be a UTAD, and then we rolled over. And if this is going to be a UTAD, we probably won't break through this diagonal support and resistance level through here. And we'll probably get just rejected from here and roll over. And then that would give us an indication of the spring failing, right? Now, how do we know if the spring is completed and locked in? The main thing that we need to look for is a reclaim of the last sell-off level. So we can sort of see how there was a bit of a supply area through here. And so we dumped off, came back up, retested that level at 36K and then had a really aggressive sell-off from there. So that was the last sell-off before the spring got put in. So to confirm this spring, we basically need to reclaim this 36K level and then push up from there. Then, we have the jump across the creek, sign of strength, pull back to last point of supply, and then we have another sign of strength, and then we go into markup from there, right? So that's how it will play out. It should start to get moving pretty soon over the next couple of days. And one of the most notable things as well that we need to remember, I discussed this in a few of the posts in the Nuggets news group and also in some of the in the Crypto Paradox Facebook group and Discord as well last week, that we were coming into really high level, high time frame futures and also options closes for those contracts. So we had 6 months and 3 month contract closing, and we can see that, you know, if we track back over the last couple of years of these contracts being opening and closing, they're actually the higher time frame ones, so not the monthly ones, but the 3 month and the 6 month ones do have very large potential to put a pivot in the market or the high time frame trend. Now we might be seeing that happen at the moment. Something that lends itself to that theory that we were watching is a really strong open. So the new contract opened this morning. You can see instantly we had a 6% push or 7% push pretty much straight away once that opened. So what are your thoughts on that, Troy? We've talked about that a fair few times over the years.
I've been waiting for the 6 month close to come in. There's always going to be a lot of weight behind this. The market always gets toxic towards the end of the contract expiries, especially on the 3 month and 6 month. And we've just seen that again. If you mark them all in your chart, it becomes a very pivotal point in the market as well. So being a pivotal point, I'm now expecting upside from here. Yeah, I think that gap is a bit of a meme. We've seen many gaps being left behind now as well, back down well below the current prices, and they are still unfilled. So I've completely, I'm not even factoring in gaps anymore. I keep an eye on both backed and CME for when they have a gap that's in confluence with each other, and that might be hit within the next day or two on maybe like the 4 hour or 1 hour, because they usually get wicked. But other than that, I think it's a non-factor. And it just becomes noise because you can't really use it as a trigger to enter your trade, if you know what I mean.
Yeah, I definitely agree. I think the gaps, just happen because the market's volatile, and markets go sideways a lot and they go up and they go down. So gaps do get filled a lot of the time, but a lot of the time they don't as well. So, I believe the gap theory is sort of a good one to try and trade off if you're trading it within the first couple of days. If it doesn't get filled in the first 3 days, you sort of have to ignore those gaps. But one thing that we definitely do subscribe to is the high time frame contracts. So the 6 month and the 3 month contracts do have a very strong potential to, when they close and when they open a new high time frame contract to put a pivot in the market. So that's what we're hoping for here, and we can continue to go back into an uptrend. We saw that happen back in 2019. Pretty sure it was somewhere through here. We might have had, so around December 30, the new contract opened. So we had the changeover from the end of the year, right? So we had the 6 month contract open and close, and then as soon as it did, we pretty much had straight up from there, and it was a really nice push for 55%. So that's just one example. You can go back and check, line them up. You can have a look. I mean, it's pretty much just every 3 months to 6 months, right? It's not that hard. And it's the end of the month. It's the last Friday of that month. So you guys can go check that yourself if you want. We have put up videos before in the past about that, so we won't cover it off in depth. I want to focus on the main things to talk about. The other really interesting thing as well here is we've had a really nice daily double bottom, right? So we put in the spring and have come back for the test of the range lows. And it looked like we're possibly going to roll over because this is a bearish continuation pattern. We have the big sell-off, and then you have the 3 green candles pushing high, and then you have the sell-off again. Usually that leads to another dump. Now, me and Roman were talking about this just before and saying how this has actually been rejected of the bearish continuation pattern, because this ended up putting in a nice doji candle, a nice with the wick below range lows here again as well, which would have caught a lot of people selling below here, getting stopped out and freaking out before the market goes back up, right? So that would have trapped a lot of people. And then obviously we've ended up playing and confirming the morning star, which is a bullish pattern. So we've had a bearish pattern get rejected, and then straight away we've confirmed a bullish pattern. So morning star reversals, have potential definitely to put bottoms in, especially when they're high time frame ones like the daily, and especially on weeklies as well. Usually is what happens to reject a downtrend and continue to push up. So on the weekly, actually, we do have a potential to play a Morningstar reversal here as well, right? So if we get a candle that closes something like this, and we get a Morningstar reversal that's a bullish engulfing Morningstar reversal is what I call it, when you get the candle closes higher than the dump candle into the doji, that's even more bullish. So it only needs to close 50% of the way up of this red candle here for it to be confirmed. So it's around 37,500 area will be definitely above. And if we close above, around this 40K area, above 40K, that's going to be a very, very bullish sign for the weekly time frame. So you can see here that exact pattern played out. And Bitcoin generally, when it finishes off a reaccumulation range or an accumulation range, especially when it's in bull markets, it usually finishes on with a weekly bullish engulfing candle or a Morningstar engulfing like this, right? So those are things to watch out for the week coming. But at the moment with this weekly SFP, it does look very strong. And I find it hard to be bearish until we close below this wick. So if we get something like this, I'll be on board with being bearish. But until then, this is a pretty bullish setup, I think, to finish off this range and start to push high and break out the top. So that's pretty much the main things that I'm looking at the moment. Obviously, still key levels are this daily P block down here at 28, which has bounced us multiple times. I don't really want to see that get tested again, though. And then the weekly order block as well through here, which seems to be holding up and doing a fair bit of price action. Whenever we've been below that, there's been a lot of buying. It hasn't spent very much time below that as well. One thing before I can move on, somebody asked me in one of the groups if I could discuss using the VPVR, and you can feel free to chime in on this as well if you want to, Troy, for Wyckoff reaccumulation ranges specifically. So the argument that they put forward was that the volume profile visible range was showing that there's too much of, I should go to this one and show it actually, is there was too much volume in the higher part of the range, which would basically be telling us that this would be a distribution range rather than a reaccumulation range. But generally that's not how it works. And I'm not sure who taught them to use VPVR for Wyckoff trading, but I certainly don't use it. And it's because the VPVR shows volume via price, right? So each one of these candles shows us how many trades and how much volume was traded at that price range. Whereas the volume down the bottom shows us how much volume was traded back and forth during that candle, during that time period. So this is volume by time, and this is volume by price. So, generally in a reaccumulation range, right, where a lot of the whales do a lot of their buying, they buy the whole and sell the whole way through. But the most important crucial part is, below the range lows. So, they do a lot of buying at, second test phase B, and a lot of buying in the spring, especially a longer complex spring like this that's taking longer to play out. They're getting a lot of time to buy in this area here. And you can see that the volume around the lows of the range isn't really that high compared to the middle of the range. It's sort of similar to the highs, right? So typically in a range, you're going to get the middle of the range is going to have the most volume by price. The top of the range is going to have a little bit, and the bottom of the range is going to have a little bit. And where the spring is, there's going to be hardly any because there's only 1, 2, 3, 4 candles through here. Whereas look at how many candles are in the rest of the range. So that's why we focus on the time candles, because the time volume, because you can see that this candle here is the highest in the entire range. So you can look and see the rest of the candles. There's a couple of outliers, but generally the volume is much lower than the spring candle that we got in, right? Which was the SFP, the weekly and all that as well, right? And then if you look on Binance Futures, you can see, this whole area through here was absolute massive volume. And selling climax, you can see how much higher it was and everything else, right? So Yeah, that's why we use volume by time rather than volume by price to work out, what the composite man is doing. So any comments on that, Troy?
Yeah, I completely agree. Like, can I share my screen for a second?
Sure,
You can
I'll
always
pass across.
see if I can. Cool. I'll see if I can figure this out real quick. Sorry, guys. Um, yeah. Can you see that?
Yep, it's up.
Okay, cool. So this is the bottom back in January 2020. This is the inverse head and shoulder we had, where those futures contracts you pointed up earlier expired, right?
Yep.
So very similar scenario to where we are right now, and very similar price action to what we're getting right now. But we have a look at VPVR here. We can see majority of the volume was in the center because that's where price spends the most time, right? If we look at the bottom down here, like you were just saying, there is literally no volume. Except if we then look what come next, right? It goes another huge rally. So it's VPVR wasn't around when Richard Wyckoff wrote out the instructions, I guess, or came up with his theory and his approach to the market, or his what's the word when you watch someone when he was watching, observing the market. VPVR didn't exist back then. These charts in general with these sidebars and the rest of it, none of this existed back then, right? VPVR isn't a part of Wyckoff. Wyckoff is about volume signature at specific candle points, right?
Mm-hmm.
This is a volume signature of buying, extreme buying, right? And that's shown here. And then following after that, the bears didn't get a chance, right? Look at the volume. Volume signature is done on per candle, not on per range in Wyckoff. It can definitely help you to trade the range. Maybe the point of control, if you know how to use that in the VPVR, it can show you where the point of control is. So if and when you reclaim the point of control, which I'll get onto a little bit later, you can then look, okay, cool, the bulls are back in control when we're above that. But this value, this red line, it constantly changes based on the volume and time that plays out. So that level could be down here if we're only this far into it, right? Because the extra volume that happened here wasn't factored in yet. So I completely agree that VPVR doesn't belong in Wyckoff. Definitely belongs in trading ranges. As we can see, if we just mark where see how it's like really light black and gray here, where it's dark black and gray up here.
Mm-hmm.
This is called the fair value area from here to here, right? Below that is cheap. Above that is expensive during that range. We never got above that during that range. So below here, below this area was all for buying, and we can see exactly what happened when that played out, right?
Yep.
So it's pretty straightforward. It can definitely help you with a trading range, but they're not made for Wyckoff. I'll pass it back to you if you want, dude.
I'll let you take over for a little bit.
Oh, sweet. All right. I'll get stuck into some charts. We'll get started on the macro and work in. I think the macro is really important to start on. This is a chart that I'm watching. It's from another trader in your Discord, I think he is. His name is Emotionless Robot. Very impressive chart. It's based on the halving, based on dates, based on price, and the hash rate. What he worked out was when the halving came in, 336 days later, we top, right? And then we've done that again here. To the exact day, we topped again with the same duration. And I found that really interesting because I'm a huge cycle trader. That's why I'm still bullish, even though we had this bit of a pullback. I think it's just a higher low in the macro scheme of things. So 337 days after the halving date, we have a top, and we have a top. Next is the same thing applies here, but on a Fibonacci approach. So that 336 days is right here, and we reach the 1618 fib on the macro, right? So we come to that, and we did the same thing again here. 336 days later, we reached that same fib. So it's like this market is pre-programmed via cycles, hash rate, mining, the rest of it. I think the key takeaway from that macro perspective like this is ignore the media, ignore the FUD, ignore the bullshit that goes on day after day. It's all irrelevant, right? I entered crypto back here, and there's been China banning Bitcoin 3 times since then, right? And look where we are now. Absolutely fucking wild. So
I think
highly
we're
recommend.
definitely due for a pullback, and I mean, obviously, like everything in the charts is very clear that we were due for a pullback when we had one. I think it's probably just been overdone a little bit and exaggerated because we had the whole issue with China, and so many miners are actually selling a fair bit because they have to actually move operations out of China. It's not that cheap to do. So I sort of feel like this pullback it has been definitely affected by that news, but it was definitely due as well, which we can see from all the macro analysis. And
Yep.
it was due at this time period, and then it's probably just been extended for a little bit longer than what we're used to seeing in bull markets, which is why so many people are thinking that this bull market's over, because every other time we had a pullback in last bull markets, it bounced quite quickly afterwards, whereas this
Yeah, we
one's
need to get that
taken a
spring
long
here.
time.
I think another if we're going to talk about non-technical analysis approach and just talk about price and the rest of it, fundamentals, institutions are here now. They are openly buying large amounts of Bitcoin. Like there's companies on their books now, right? We're in a different world than we were back here when this played out. So these institutions and that are now getting on board, they know, all right, they know that this is going up now. That this it's now being adopted by countries as legal tender, right? So the company, not company, the institutions, they're going to want to suppress price as hard and as vicious as possible. If you look at gold, it was suppressed for 7 years, and there were many people who got fined for that, and the rest of it, blah blah. And then we saw what gold did, right? So when we have these pullbacks, they're going to be ugly, they're going to hurt. This could potentially be the last time big boys can get in, right? Because we never ever came back to this point again. Yeah, right. Which is relevant to where we are here. So maybe this is the last time we ever see this low, if we do rally from here, right? Because it happened once before, we never came back to it.
Agreed, right? And that was
So
also, if you look at it, that was basically the consolidation candle that put in the bottom when we pulled back to it at the bottom of the bear market. So possibly this could be a very interesting area that we might come back to in the future.
I think that's why we're seeing crazy news like Binance is fucking screwing over the UK people and the rest of it. We're seeing everything being thrown at us right now during this low, right? I think this is institutions' last time to grab some. If we are in a bull market and the cycle was to play true, this is the last time for them to actually get it before it just goes nuts.
Yeah, the Binance UK thing is total FUD. And it's like been something that has been, futures and options trading for crypto in UK has been banned for years. So it's like, it's so random that came out. I was like, what the hell? Like, this doesn't make any sense. This is like news from 2018.
Yeah, it doesn't make any sense at all. Here's another chart I've got. I'll just share the URL here. So anyone who's watching, you can just go and throw these letters and numbers in to get access to this chart. This is a live chart, and I've got it shared so anyone can grab a copy of it. What it is all data from all previous cycles overlaid to our current cycle based on durations from the highs to the lows, the rest of it, and then overlaid as well based on the point in the cycle, what price did afterwards. So at the moment, we're going for a longer accumulation phase than these previous ones. But as you can see, like this one here, it didn't really go too much higher in price, but it also didn't have a 3-month rounded top prior to this moment. It's just, this chart is more of just based off times between highs and lows, and then the marked here, right?
Yeah,
So
definitely.
if we end up in this zone up here, above this trend line, the broadening ascending wedge, the 3, 1, 2, and we end up here, if this does play out, this is my get the fuck out zone. So I'll be looking for tops if we reach that. This is purely just based on previous cycles, and so far no cycle has been identical, so we can't use this as a perfect cheat sheet. But just give you a bit of a heads up, right? If we topped exactly 336 days here, as we did the previous cycle, right down here, the same duration from the halving, then I'm going to pay attention to these dates. It doesn't mean that there's going to be a specific top, and it doesn't mean if we reach, I'm going to sell, but it does mean I'm interested in those, just based on cycles and patterns. So that's a chart you can steal. If you screenshot that and take it. Now we'll move on to current price. Looking at the monthly closes in a couple of days. So far, it looks like a Morningstar reversal setting up. Yeah. Right. This is usually how an ascending triangle forms. This is usually the first throwback on an ascending triangle before it does something like this. Now, being on the monthly chart, we might just end up doing something like this and then taking off. We might be sideways or just recovering for the next month or two. We have no idea. But if we close like this or higher, I've got to hold my bullish bias, right? Because essentially on the monthly, Here's our low. Here's our high. Here's our higher low. Here's our higher high. This could technically just become another one of these, right? Before we then cycle up higher again. I don't see why we couldn't do that. Let's come back to the monthly P candle here, which you can see, which is based off a custom indicator of mine. And let's come back and top that perfectly. So if we were to jump down to like the 5-minute chart and go have a wee squeeze at that, it perfectly tapped into it.
So good.
Right, and that gave me, which I'll cover shortly, the logic I used to take my trade in that. That gave me a really great entry for my long. So that was the monthly. I was waiting for that to come in. I think we've got the 3-month and the 6-month coming up shortly as well. 6-month is here, right? Looking pretty ugly at the moment, and on the Binance chart, it looks completely fucked. But if we go and look at it on the Bitstamp chart, and if this just recovers even just half of what it is now in the next 4 days, which I think it's quite possible if the bottom we just put in, if this recovers just even somewhat, we're going to have 3 6-month green candles in a row, which is what we had coming out of the previous market cycle as well. If this can close over halfway of that current wick, then I'm going to assume on the macro there's further upside coming. Doesn't mean there won't be a low. As you can see here, this one here closed here, but still had a deep low into that candle body. So if this closed up here, I could still expect a wick back maybe 35, 34 before continuation. So I think I'm just watching the macro there on the 6-month. We've also got the 3-month close coming in. The 3-month was pretty ugly. It's an SFP here, right? So I would really like to see this either come all the way up and then close back up here as like a doji, and then reject the evening star reversal, or just a healthy close, at least half of the Marabuzu candle here. So if we can close above that, it'd be an inside bar, and then we can potentially go further upside. But that monthly SFP there, not pretty. So the 3-month SFP there, it's not very nice. And then we've got the 2-month. That also expires. Right, the 2-month looks a bit better. There's no SFP on the 2-month. But they all expire at once, and I think they're all relevant. As we can see, say this huge 2-month candle here, no one ever looks at the 2-month. But if we look at this 2-month, it swung below the demand candle here, this white candle. It swung below it, closed back above it. A no-brainer to go along in a sense, a Dragonfly Doji. If you guys may remember, if you're in Nuggets News Group, he actually retweeted that or tweeted that that I'd pointed out to him. So that was a huge sign that there was a liquidity grab, right? A rejection. Price did not want to be down here. It's a good way to look at wicks. The price came down here and got rejected from being down here, and then closed green, as we can see, or white in my sense, but that would be a green candle. Let's move to the next chart. This is the weekly. The weekly, we've just been in this range here, right between the candle bodies and then the candle wicks as well down here. I think the next logical point, if we were to look at this from a max pain point of view, because that's what the market is, it likes to punish people, right? The next point of max pain is actually up here. So whether we have a swing low first, or whether we come down to halfway of this candle, it's usually the case, and then recover, I think this is the point of max pain. Even if we're going to go down, I think we'll go up first in a bear flag form. So if this is going to be the top, and we're going to a bear market, I think we'll swing this high here first before we come down.
Yeah,
it's usually the
huge UTAD, and then are all over.
Yeah, that's where the most pain will be. So I think that's where she'll head. The other thing is if we go to recover and we do end up here, I think we're going to linear scale. Here we go. There's a 618 fib from the swing, that entire swing down. The 51,000. If we were going to reject anywhere, I'd be looking for dirty SFPs at the 618, and then looking to hedge that just in case this is moving into bear market territory and we do make a lower high and then end up making a lower low again. If that plays out, I'd be extremely cautious, and I'd be looking for that kind of just pretty much a candle that would come up, wick the high, and then come back down, make a lower high again. So it'd end up looking like a bit of a head and shoulder pattern on a downtrend. So here's our left shoulder, end up making a head and a bit of a right shoulder, and that looked like a bit of a rising wedge like that, and then capitulate. if that makes sense.
There's a lot of resistance between 47 and 50K.
Yeah,
There's a few key things there. So
yeah.
it's definitely the area to watch out for.
So I'll probably be looking to hedge there regardless. I'm happy to get stopped out of my hedge. Hedges are there they're like the way I see a hedge is it's an insurance plan on your profit. So if you've gone long down here, right, and you're nicely in profit by the time you get up here, you don't want to give any of that profit back, and you don't know if you should take profit because you're at that 618 and it's getting ugly. So instead of taking profit on your long from down here and losing that really amazing entry, you can then just go short on another account and then ride that down. And if that gets rejected and then goes back up, then you probably get stopped in profit. If it doesn't get rejected, then you can ride that all the way down and your long probably gets stopped out in profit. So I've been trading this entire range like that, being long and short in every high and low, and not having a bias in the sense I'm macro bullish in the sense of cycle, but in my swing trading or in my trading, I'm very fluid, right? So if anyone's following me on like say Twitter or something, you might get a bit of a like, wow, he's gone from like max bear to max bull. I'm bull in the macro, but I'm very fluid in my own trading. I've got no real bias in my own trading. I just use logic. Next was the 3-day chart. We had a 3-day demand candle here at the bottom of the bull flag, so we can see if we draw this in, we come up, we come down, we come back up, come back down, make a higher low retest and pump, right? So that's a bull flag, and we left a demand zone here. We've come back, tested, held, and held one more time. There's a 3-day close coming in 1 day and 22 hours, so pretty much 2 days from now. If we can close above this demand zone with, I think there's you pointed this out, Kyle. There's a 3-day bullish divergence forming here as well potentially. So if we hold demand, especially after wicking under it, there's a lot of trap shorts down here. If we can close bullish in any form of a candle, any form of green candle, I'd be expecting some upside because this is where max pain will come in for the bears who shorted the low of the range.
Setting up for a Morningstar close as well.
Yeah, we can pump up here. You have the push down, and then you've got the some form of doji and push back up. So some form of Morningstar off demand with a 3-day bullish divergence there. You've got to play the chart, right? That's what we see. We trade what we see, not what we think. And what we see is potential for a reversal here on the 3-day. Keyword being 3-day, they do take time to play out. You might, like, for instance, through here, that's 3 times 4, right? So that's 12 days. It might take 2 weeks before we see any kind of actual price action. So just on the higher time frames, remember there's time involved in those. Next was the another reason that helped me take my long that I was watching. We also had the daily P here. Been tested once, tested twice, tested 3 times, right? It finally came back into it here. So that was another bit of conviction I had to take my long down here, which I'll get into soon. And we've also got a lot of divergence here. See the gold and the green? Green's from RSI, okay? The gold's the custom ones, but it's saying that pretty much majority of the market are all seeing divergence across their own trading strategies. So you guys might know some traders like say Travis, Kyle, even Trader Cobb. They've all their own different oscillators they use. They've all seen divergence here. So you've got all the eyes of the market seeing divergence at the moment. No matter what their trading strategy is, whether it's RSI, stochastic RSI, MACD, OBV, all the different oscillators are all seeing the same thing. So I would not be surprised if we get a rally off that, right? It's starting to interest people to probably want it to go long. And then once that impulsive move like this morning takes off and starts happening more, then that FOMO is going to get more and more, right? People don't want to get left behind. They don't want to buy the bottom, but they definitely don't want to get left behind. So we had that here as well. And then just moving on to the range itself. This is the trading range that I've been trading, our current sideways crab market. And it's just the same behavior over and over again. We had an SFP here. So it swung the low of the previous candle, right? Came lower than that low and then closed back above it. And then reclaimed the range in that sense with that bullish candle here. And then ran to the high of the range and repeated the same thing that it did there. So this is the wick here. There's a wick here. Came all the way up, did exactly the same thing again, swung the high of that wick. SFP pin bar, reclaimed the range just like it did here, and inverse, and then came back down. So I actually had a long open here because this was a perfect bump and run bottom, and there's another bump and run bottom on the smaller time frame here, and then there's another one again on the small time frame again, and the very bottom here, which I'll go through again because the same thing happened over here. Then we got the pattern here, the broadening descending wedge with the liquidity grab. Again, we did exactly the same logic again. We swung the previous lows, right? There's also another low all the way over here that we swung as well. All right, this low here, we swung that. And then we reclaim the range again, right? So this is, once we had breached trend resistance here, that was my, okay, I've got to be bullish here. All my planning, all my homework, everything says to be bullish once we reclaim trend after breaching it, the trend line coming down, because this is an accumulation pattern, right? I'll get to a more in-depth version of it soon. But all we did was come back down and retest that. We haven't lost that, and now we're seeing bullish price action off it, reclaiming fib after fib. So it's looking really strong right now. I think any professional trader or any half educated trader will say you buy support, right, and you sell resistance. You short resistance, you long support. I've been doing that this whole range, and it's been working out fantastic. So I'll keep doing that while we're in the range. But with my long I've currently got open, I have no plans on closing that. Ideally, I'd like to take this all the way to 100,000 if we do end up going to a further cycle up. So if and when we see some form of rejection, I will hedge and not close, if that makes sense. I'll open a short to cover the profit of my long, just in case it comes back against my long. So I hope that makes a lot of sense. That's just a repeat of the 618 after the 336 days. We can all of that. This is a really interesting thing I wanted to point out. We had the head and shoulder pattern here, right? This is back in August 2020, right? After we broke out of this huge, boring sideways range. We had the head and shoulder, we came back down. We reached the one-to-one extension just from the head and shoulder. So what that is when you trade a head and shoulder pattern, it's usually a cock and balls type pattern, right? When you lose that neckline, it's usually the distance of the head from that trend break is where you usually look to take profit, right? And that's what played out here. I reached that down here and then went into a accumulation, from some form of accumulation, trading range, if you want to see it as a sideways market, or it went into a bit of a bull flag here, if you want to see it as a fractal pattern market. Either way, I reached the measured move of that and then reclaimed the trading range above here, right? So that was the previous range. This is the bottom of the range. It came back into it and then took off. Right, so we go and look at the current price action. We just had the head and shoulder. I'll just draw it out so you can see it. Right, this is the real head and shoulder. This one has played out. Right, the one that Michael J. Burry's talking about, I think this is a bit of a meme, but fuck, he might be right in the end, who knows? I think that's a bit of a meme. All right, the one that did play out has played out, and it did reach its target, just like that previous one. So if we use a fib tool and drag it from the high to the low of the head, it gives us the measured move, the one-to-one ratio. So the distance between here and here, from the point of break, like we just discussed, I just randomly drawing that, but came down and touched that perfectly. So when I had the monthly close, the 3-day close, the daily close, all these things converging into a single point, I couldn't not long down here. For me, there has to be more. Once you've reached the pattern's target, all right, once you've reached that, you need new market structure before you carry on down. So either we go into a rising wedge of some form and then fall further, or I just don't see the market going down yet. There's just too much support here, too many reasons to buy here. If you were going to sell as a bear, you would have sold up here or up here. I don't know why you would sell here. So anyone who's been selling or shorting down here is in a really hard time right now. Next is just the broadening ascending wedge, the bump and run. So here's just two really random ones that have played out. This is our 2017 market, right? Breaches trend temporarily, falls back in, goes into a descending triangle, right? Same thing here. Breaches trend temporarily, falls back into it, goes into a descending triangle. The same thing happened twice. So we can look at current price. We've got it drawn here. Here. The broadening descending wedge. All right, this is the inverse of it. So I'll just invert the chart so you can see it exactly what we just drew. We've got the broadening descending wedge. We had the liquidity grab. We fell back into range. We've now lost it. I'm expecting from here to play out a descending triangle, right? So if we invert the chart back to normal, this is normal here, becomes a reversal, a perfect reversal, right? You'll end up getting a bit of an inverse head and shoulder, and that'll probably end up on socials over the next week or two, which will then becomes the ascending triangle. That'll end up on socials, and we'll pump. That's the bullish play, I think, from here. Just wanted to cover on the broad ascending wedge, just a little bit of an education. There's a right angled one, which is when the top is flat, right? And you get the liquidity grab, come back up. This is the whole 2019, 2020 market, and you have the little retest here, right? And then in that, you've got a broadening descending wedge or a bump and run bottom, right? Again, the free waves, liquidity grab, reclaim, bump, ascending triangle, right? It's all there. Now, why are we talking about that? That's going to play out here. That's the plan. But I'm just going to cover how I took my long position, so maybe you guys can see how I was able to get a knife catch without being retarded. This wasn't just a random degenerate buy. My average entry is 29600-ish. It was a market buy down here. So I'm long from down here. I'm going to cover why I did it. Did it on stream, so I'm not sure if you follow my YouTube, but the idea was we had a large broadening descending wedge, which we were tracking, right? We had the liquidity grab, huge volume increase, which is what we look for. And then there was another one here, right? And that converged liquidity grab at the same time as the biggest one, right? So we had two converging at the same time. So if and when it reclaimed here, it was a buy. But because I'm a degenerate, I was on the quite low time frames trying to snipe this entry because it was also the range low. It was also the monthly TD9. If we look here, this is even lower time frame. This is in the 5 minute. I'll just zoom out so you can see what's going on here. 1, 2, 3, right? And then the one we pointed out before, 1, 2, 3. There was one more on the even smaller time frame. 1, 2, 3. So if we had 3 different bump and run bottoms or broad and descending wedges, all come down and had the liquidity grab at the same time. Because I was able to see that and understand that that was the level to buy at, I was able to get a nice long entry in here. Now my stop loss is nice and safe below here, and this market can do whatever it likes from this point onwards, right? So I use a combination of horizontals, trend, patterns, indicators, the rest of it, all converge at once to get a nice entry. I hope I can ride this entry all the way up to 100K. I think we will reach 100,000 by end of cycle. And hopefully this was the bottom. And that's that chart from earlier. That's pretty much all I got for Bitcoin. I've been boy years.
Brilliant, man. It was a pretty epic rundown. I think the guys will definitely help a lot of people to give them a bit of understanding where we probably are in the cycle and what's to come next, and help them sort of put together their own trading strategy based on new knowledge.
That's I think confluence is a huge thing. So if you can master, say, horizontals, and then master, say, maybe a couple of trading patterns, or maybe an indicator or two like RSI or maybe Ichimoku or something like that, you can get a huge edge. Like I've got different templates on my trading view, and say one of them is just volume, and Ichimoku's cloud, nothing else. So I can just watch volume and the rest of it, because I understand naked price action. Right here is a supply candle, right? We've also got the Ichimoku Kumo. We've also got the VPVR point of control through here, and the lower side of that here, right? You can see there's resistance above this range right here. So we're seeing rejection, SFP dump. We've got another SFP potentially closing in an hour. We might see a pullback one more time, which we're expecting, because we want to get that ascending triangle or inverse in the shoulder that everyone will talk about. Ideally, that's the play. Yeah, confluence. Risk management is number one in trading. You should always manage your risk. It should always be a stop loss. Your stop loss determines your entry size. Leverage isn't a gambling tool. Leverage is just if you've got $100 total in your account and you want to take a trade of $100, instead of using 100, you can use 10 on 10x leverage, right? Does that make sense? So you don't go and degen your whole portfolio away. You actually use the leverage to replace the amount of money that you were going to use, if that makes sense. So that it frees up capital and it means you don't have to have so much money on the exchange. A lot of people seem to be really confused about what leverage is and think it's a bad thing or think that degenerates use high leverage. That's not the case. That's not the case at all. Leverage is just a tool to save capital.
Right, definitely.
All right, I'll shut up.
Too
Feel
easy,
free to
man.
take the chart.
For joining us today in the episode.
All good, man. Thanks for the invite. Hopefully this market gives us 6 more months of green.
Right, 100%. That's what that's what I think the people are looking for. Be surprised if we did end up wrapping up this market sort of halfway through the bull market, but anything can happen. We need to stay vigilant and watch out for that 50k sort of area where we've got a lot of resistance. So as you can see, I've got it marked out around through here, the previous range lows, and then also what Troy was showing as well before with the Fibonacci level, right? So that is definitely the main area to watch if we do get a strong bounce here. This 47 up to 51 area, right, through here. So that is where I think we need to be focusing on for hedging. And obviously range lows, range highs here as well. If we do something like that, that'll be a nice short entry to protect your capital. If we do break out the top of this range and put in, what would be considered a UTAD in a redistribution schematic, and that'll probably lead to a rollover or just nasty rating for a long time. So it'd be good to be hedged from range highs here. If we do something similar to this candle here, see how we just put in SFP of the previous range high wick. Do something like that again, similar, come up to 43 and roll over again. Or as Troy was talking about before, pump up to here, do something like that. That would be another opportunity to get in and protect capital for, a rollover into the bear market. So like we were saying, it's probably unlikely that we just roll over and nuke from here. Most likely we do get some sort of a rally up to minimum 50k and then roll over. If we do take out range lows, we're probably going to head much higher. So just a quick touch on alts, probably some that I'm liking the look of here would be Solana. We're talking about IOTA before. We think a lot of altcoins have just done something very similar to this, had the huge dump off. We'll probably get trapped going sideways for a long time. And then probably later on in the year, start to catch up to Bitcoin. Because if Bitcoin really takes off here, it's probably going to leave altcoins behind for a while. So that would be my analysis of altcoins. I think probably Matic and Solana will be the two best ones to sort of keep our eyes on in the meantime. But I'd be looking mainly for Bitcoin to take over the show here. I will be watching for breaks of these downtrends. So Matic, for example, if we do get a breakout and flip this into support, something like that, it could get a nice rally. So that's the sort of things I'm looking for, these downtrends to be broken, right? So something like that could end up leading to a pump. But generally, altcoins are going to get outperformed by Bitcoin, I think, if it continues to push higher at the top of this range. And if Bitcoin dumps, altcoins are going to dump way worse as well. So definitely time to have majority of Bitcoin in your portfolio, in my opinion. And always, of course, be watching Bitcoin dominance market cap as well. So that's going to be an interesting one to watch and see what we do around this 52 level, because it's obviously a key support resistance area. That could lead to potential altcoin rallies as well. If we flip that into support, it's probably going to look pretty bad, but I wouldn't be surprised if we come up at least to 52 or even 57, 60 area before the next rollover towards the end of the year for altcoin pump. So that's pretty much it, guys. Hope you got a lot out of today's episode and a lot out of Roman and everything that he was talking about. He does have an indicator suite that he put together, which you can find at Profits.io or Profits.com, is it, mate?
It's not VIP.
Rob, sorry, VIP, excuse me. So Profits VIP, and you can get the indicators that he put together, which are pretty handy. I do use them, mainly the P blocks one, because it's very, very handy, which is this profit indicator here. You can see that it gives you pretty good signals that the market's probably getting ready to reverse. So there's a P candle through here. We've got the reversal there. But on the higher time frames, especially like he showed you the one earlier with the monthly P candle, monthly P block reversed us. And one thing I've definitely been watching for as well is this one through here helped me a lot to long the bottom back through, when was that, January, when we've had the first dump from 40K down to 28K. And then, whoops, we've dragged that level across. You can see it gave us a really perfect entry here, and then also here once again. So they are pretty handy. The weeklies are obviously important ones to watch for as well. We just put one in then. But I've gotten the most use out of the daily P blocks, and obviously the monthly one that he showed just before. So yeah, that's pretty much it. Anything else you want to add about the indicator suite, mate?
Um, there's a free trial, so don't feel like you have to buy it. For 14 days. You got plenty of time to play around with. There's a couple of video tutorials. Have a play if you guys are looking for an indicator, but if not, I highly recommend you master price action first. You should be able to read a chart without an indicator before you use indicators, in my opinion. I'd recommend if you're new to trading or investing, don't even bother. Go and maybe do the market mastery course first, that Kyle hosts and runs now, and learn the price action, because there's no point having an indicator that tells you to buy and sell if you don't actually quite understand the price action itself, where it's saying to buy and sell. You're probably going to have a hard time. You can't just follow it blindly. Disclaimer: this market isn't easy, and there's no tool that makes it easy. You've got to master price action, in my opinion.
100% right. So if you want to learn how to read price action in the market, I definitely suggest getting on board with the Market Mastery course, which obviously Roman was part of that course and recorded it with me. So we actually teach the course about 50-50. So if you like the analysis and everything that he used today to explain his basically strategy and analysis of the market and how he also entered into that trade, we actually do cover everything in the Market Mastery course. So you can get that by going to marketmastery.io. And it's this one here, Market Mastery 2.0. So Roman was half of the team that recorded this. So you can get all of my strategies, all of his strategies, and then everything we talked about, oscillating indicators, divergences, Ichimoku, the list goes on. So in week 4, session 12, we actually have the entirety of Roman's trading strategy. So yeah, that is definitely one you want to be watching. And then mine was week 4, session 10, covered all my strategy in depth. So you learn everything that we use throughout the first couple of weeks, and then at the end of it you learn basically we run over and run you guys through our strategy from head to toe. So that's pretty much it, guys. You can get this, you can pay in Bitcoin as well if you want to. That's pretty much it. We'll probably wrap up the video there. Thanks a lot for joining us, mate, and we'll see you guys in the next episode of Market Mastery.
All right, catch you later.